It's the UK interest rate decision this Thursday at high noon. In addition to the usual rate announcement and the spread of voting members and, of course, the minutes, this month there's the added interest of the inflation report. The markets are pricing in a 90% chance of a quarter-point rate rise here in the UK come Thursday. Andrew Wishart joined us out from Capital Economics, where he's a UK economist. Should we expect a rate rise? Is that your base case?
Yes, we think the market is right to be pricing in an interest rate rise. Although the inflation data and the wage growth data have been a little bit softer than expected, the big picture is that the economy is still evolving in line with the May forecast. The Bank of England said then that if that was the case, a gradual tightening in policy would be appropriate. And also the opposite, unlike in May when the data did start to weaken, and then the Governor, Mark Carney, sort of pushed back expectations for a rate hike. He hasn't come out and said that this time. So although we still think the vote will be split, we think the MPC will press ahead and raise rates.
The Deputy Governor, though, has come out and said something which was actually quite pointed. I think, to quote him, he was saying there's no rush to raise interest rates. Now, he's the Deputy Governor, so carries a bit of weight. He only carries one vote, of course, but he does carry a bit of weight. Are you not persuaded by his arguments?
Yeah, so John Cunliffe is, of course, one of the two members that also voted to keep rates on hold in November when the bank last raised rates. And I think he just wants a bit more reassurance that domestic inflationary pressures are starting to rise. However, the MPC as a whole, I think, are happier that they are seeing those wage pressures start to increase. And you know, it's important to note that the May forecast only had average weekly earnings picking up to 2.75% by the end of the year, and it's still at 2.7%. So I think you know, from what the rest of the committee are saying is the collective view, I think he's on the edges of that. Yeah.
So going to be a split vote this time around?
Yes, we think that, as we said, John Cunliffe will vote to keep rates on hold, and there are a couple of other members that might join him, in particular Silvana Tenreiro. She's been a little bit more optimistic on the outlook for productivity, which means she thinks that wage growth can be around 3% without such an impact on inflation. And the other person we think might also vote to keep rates on hold would be Dave Ramsden, who is of a similar view, although he's a bit more marginal of late, with a speech saying he might be coming round to the MPC's collective view. So
it's a 6-3. Yeah. In your book, come Thursday. What about? We spoke about the markets pricing things in. If we bring up a sterling dollar chart, we've seen a fair bit of sterling weakness recently. One of the recent high prints we've seen, 16th of April, was what, 143.89, 149.90. Here we are now down at 131.16. This sort of shape of FX market doesn't instill confidence in me that they are going to go this Thursday. Of course, that's where we are at the moment. What are we pricing in here in terms of where we go after this interest rate rises? We've got it, perhaps maybe. Are you confident we're going to see further interest rate rises this year or not?
Well, I think in terms of what's priced in, I think that there's not. I don't think investors in general think there's much of a prospect of this being the start of a tightening cycle. And I think obviously the Brexit news flow has also weighed on the pound recently. Those two things could turn around quite quickly, actually, if we get, firstly, a withdrawal agreement in October, which would guarantee the status quo in terms of trade out until the end of 2020.
And that's your base case?
And that is our base case that underlies our forecast, yes. And the other thing is that if the activity data holds up, you know, with wage growth, we think that, you know, the survey suggests it will pick up to 3%. That's a good backdrop for the MPC to start normalising monetary policy, and you know, it's still very supportive at the moment. And I think if they have the opportunity to, the MPC will try and press ahead and raise interest rates to a more normal level, albeit still well below pre-crisis levels.
Okay, before we bring the chart back up, what is normal in the Bank of England sort of picture, if you like?
So that's what another interesting piece of news we're going to get in the inflation report this time round. The bank are going to publish their estimate of the neutral rate of inflation, interest, which is where they think would be neither supporting nor sort of trying to cool off the economy. and most expectations for that to be about 1.5%. So in that framework, in that context, I think the bank could feel more able to press ahead with interest rate hikes.
Okay, from here on, assuming we do get one on Thursday,
yes.
Do we go again in November? Because that's when the next inflation report comes out.
Yes, so that would be there are 2 meetings before them. That is the second meeting from here, but of course that's the first sort of live one because of the inflation report. I think Brexit will be a key factor there. If we don't have a deal in the October summit, then I think that would probably put the chances of that, blow that off course.
But you are going for a November rate rise, assuming
yes,
we get
so
this
we're
deal.
assuming at the moment, we're working on the assumption that we do have a deal in October, and also, we think that wage growth will pick up towards 3% in the prints we're going to get before the November meeting, and we also think that economic growth will hold up at about 0.5% a quarter. And against that backdrop, we think the MPC would be able to continue normalising policy in November. Yeah,
okay, so if that happens by the end of the year, effectively base rates will be double where they are at the moment.
That's true, yeah.
Half of 1%. Let's just go back to the chart. On the basis of what you just said, 131.14, what's your base case then for sterling against the dollar, given that we are, by the end of the year, going to see base rates at 1%?
Well, exactly. I think a rise in UK rate expectations are one thing, and our forecast is actually for the pound to rise to 140 against the dollar by the end of this year and 145 by the end of next year. Of course, the flip side of that is what's going on in the US, and there we expect the end of the Fed's tightening cycle to start to come into view. In fact, we're forecasting quite a sharp slowdown in the US economy towards the back end of 2019.
Mm-hmm. Yeah. Okay, interesting. Look, we'll leave it on that. But Andrew, thanks indeed for joining us with your outlook for UK interest rates. High noon, as I said, this week, that decision on interest rates, Capital Economics going for a 25 basis point rise this time around with a 6-3 majority. You'll watch out for that. We are live here on the IG platform, giving you analysis of that and the trades around the deal. Will be live until 12:15, so we'll take into account that. Also, then we'll be able to look out to that all-important November meeting. Do we get the Brexit deal, which could see another interest rate rise come November? Subscribe to IG for educational content, company insight, financial analysis and expert commentary.